What do you think happened to the share price and why it sold off so sharply since the IPO? Is it a narrative? Is it the broader IPO market, or is it just the business struggling to come back?
In general, I think what we're seeing with many of the stocks that debuted in this past year, some of which you also just shared on the screen, is a lot of volatility and a lot of question marks around stocks that went public during this moment when the market is generally in a great place. But there's still a lot of question marks in terms of a lot of the newer players. So I think they all just needed some time to settle, honestly. You've got a lot of new business models, a lot of analysts trying to figure out the right way to read and interpret numbers and think about complex business models. So I think we'll see, stabilization and settling, but it'll take time. There's a lot of new players out there.
Does raise a question about whether now or a few months ago was the right time to go public. Any regrets on that front?
I think for us, at Rent the Runway and likely many of these other businesses, whether you think of Real, Airbnb, you don't know how long the COVID variant's going to last or change. You kind of at some point need to just focus on the business and plow forward and do what's best for the business. So, I think all these businesses have long-term sustainable models that are very forward-thinking and will be there for the long term. And so we're thinking big picture, long term, as are, I think, all of those other companies.
Yeah, 2/3 of IPOs that went public this year are trading below their IPO price. And I wonder from your venture seat now how you guys are seeing that. Was it too much supply or something broader in the market, for instance, the changing liquidity or inflation in the Fed?
I think a lot of, momentum often in the stocks when they first came out, a lot of excitement and exuberance, and still a lot of new people kind of playing into the market and creating more volatility where they're trying to figure out the right way to interpret some of these newer players. Again, analysts trying to get the right models and the metrics for these new business models out. Meanwhile, you have consumer behavior that's changing at a faster rate possibly than ever before. And whether that's because of the COVID variant, driving more people onto online shopping and having them change the way and the amount and how they shop and where they spend, whether it's components like Web3 and the metaverse and having some kind of additional share of wallet being taken there, whether it's supply chain issues, there's a ton of variables that I think everyone's just getting, excited about one moment and then scared about the next moment and trying to find the right happy place for them all to settle in. And obviously with newer players, there's a lot more volatility.
I believe you are bullish on this idea of the consumer and retail in the metaverse. Nike's dipping their toe in. I'm not sure if we've seen a lot of other examples. What do you think? Who do you think are some early winners here that we should keep an eye on?
I'm really bullish on the metaverse, Web3, and what has in store for luxury brands, but I'd say just brands generally. So you have seen many brands, whether it's Gucci, Burberry, Nike, you mentioned, Taco Bell, Charmin, exploring the metaverse and how their products might have a digital impact. There's a business that I do some work with called DressX, another one called Boz, that both focus on how do you bring fashion into this digital world. And I think at the end of the day, it's just another tool to enable experiential commerce. This idea that consumers want to immerse themselves more holistically with brands that they buy from. So a brand is no longer just a way to transact and get the product you need. It is a statement about who you are, the values that you believe in and that you hold dear. It is then shared on social media as a way for you to kind of push that out to the world, people you know, people you don't know. And so I think we now have this additional tool of the metaverse to let you explore this even further and to kind of have that deeper interaction and often level of ownership with many of these brands.
Where do NFTs fit in? Because we've also seen a number of luxury brands experiment there.
Yeah, NFTs, I think, are a way that consumers can feel a sense of ownership and connectivity to various assets, which at the end of the day is really powerful, because when you buy a designer product, we're used to buying, let's say, a physical handbag. That's a statement about who you are. It's a statement about, a product you were able to afford and some sort of, stature, some sense of style, perhaps. And so now you have the ability with a broader set of assets to connect to those products as a consumer, but in many instances to also feel a fractional sense of ownership of that kind of initial product, that initial digital item that you're then able to let other people kind of fractionally have ownership pieces of. So I think it's just giving us a lot more flexibility of shared ownership models, ways to engage with these products in the digital world. Brands, I think, are more important than ever. If I look at the NFTs out there in OpenSea, most of them are right now of celebrities or of logos of famous brands. I think people are still trying to get their hands around how to convey and bestow value in this metaverse, in this digital world. And so the easiest, quickest way for that to start is often with brands that we know and trust, celebrities as a form of a brand, and these kind of icons that we can connect to and relate to. And so that's, I think, where we'll see a lot of the initial momentum into the metaverse and what's already started.